Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, January 6th, 5:52 p.m. Eastern Time. Coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. Market state, I could say confusing on here. Uh, it's continuing to be different markets depending on what you're looking at. Value continuing to lag behind growth, leaders continuing to outperform the indexes, small cap, mid cap, and the Dow lagging, equal weight S&P lagging. NASDAQ 100 leading, and the Dow, since it's heavily weighted in those big NASDAQ 100 names, the S&P, because it's weighted in those big NASDAQ 100 names, also outperforming. So all in all, short-term pullback, we're a few percent off of the highs on the NASDAQ and the S&P 500, but in much worse shape if you look at those other indexes that I mentioned. So really what we did is not have a Santa Claus rally. We're actually closed down about a half of a percent during that 7-day period that is traditionally strong. So the next signal that the market looks for, and this is from a seasonality standpoint, is what happens the first 5 trading days of January. There is a strong correlation to what happens the rest of the year with that. And the day after New Year's, we gapped up and faded right away. So the thought was there was going to be more continuation of what we saw leading into New Year, but some subtle strength in leaders, despite the indexes all closing lower the day after New Year. There was some subtle strength in the indexes, and sorry, some subtle strength in the leaders. And then on Friday, we gapped up. Leaders acted very well, and more of that today. But this was the third day up for leaders, and third day up is not the time to pile in. We saw some negative reversals on some of those, on a lot of them, actually. There's nothing's ever easy in the market. Chasing is rarely rewarded. Um, but we are focused and it continue to report on what's working versus what's not working. You can see the trend gauge over here. Market leaders still neutral, but with the with the green sub arrow. Um, Strong leader counts on Friday, as Connor mentioned in his video, and 18 of the 21 of our 21 over 21 list were up today. So leaders continue to act great. Short term, NASDAQ 100 and the S&P got back above the 21-day moving average. We need to see multiple closes above that level to come off of the red arrow or protect mode from short term. And that's really one of the main reasons why we're still sticking with short term pullback as the market state. Medium term, neutral. We've got the S&P and the NASDAQ again. The NASDAQ multiple closes above the 50-day. The S&P popped back above it today. This was one of our keys coming into today. So the S&P regained the 21 and the 50. Now we need to hold it. As I said, after 3 days up for leaders, basically 2 days up on the indexes, but they were some decent returns. However, there's always a however, isn't there? As soon as you get everything that you think is all green, you got to watch for the 2x4. In this case, after the gap up open and a 2-hour rally after the open, we faded for 3+ hours in the afternoon before a minor bounce into the close. So bottom line is neutral on medium term. That's the indexes versus the 50-day. And of course, long term, market never gets into serious trouble unless you break the 200-day moving average on the indexes, and all of them are above that level. So what happened today? I kind of spoke about it. Gap up in the morning, faded in the afternoon. But we were led by growth. Growth far outperformed value. For example, SPYG up 1.1%, SPYV up 0.02%. So it really is the growth leaders carrying the torch for the market. BIG-8 semiconductors, Foxconn, a major Apple supplier, reported big earnings or big sales growth, one of the two, but it trickled over to the semiconductors and the BIG-8, and that's really what led today. Leader strong and semiconductors also strong. The big CES conference is kicking off later today and or tomorrow and the rest of the week. There'll be a lot of news, especially relative to data center names. A lot of them have run into this event. So we'll be keeping an eye out for how are they reacting as the different conferences and presentations unfold. But despite the fade in the afternoon, Big 8 semis and leaders remain strong. 21 over 21 up almost 2% on average. As I said, 18 of them higher. And the Big 8 up an average of 1.73. RG8 up 0.78. Mixed on the indexes. We'll look at those charts when we go through the index charts. 60/40 positive by 0.37. This was mostly stocks. And our flagship GROTECTION portfolio up 0.72%. Let's dive into the fun and want to talk about something that we talked briefly about last week. And this is all of the indexes as well as the RG8 are either approaching or are oversold and they're hooking back up. You don't pile in when things are weak for an extended period of time. You don't pile or you don't pile out or short. That's called shorting in the hole. You never want to do that after being down for 4 or 5 days. You look for a bounce, which is expected. If you don't get it, then the market's weaker than what you thought. But this 2 day bounce, very nice from a leadership and from an S&P 500 and NASDAQ 100 perspective. You'll see when we go through here that we failed miserably into the declining 21 for the lagging indexes. But we do also want to point out that setup is there. You certainly would rather be coming off of oversold and hooking up than putting a bunch of money in the market when you're already overbought and hooking lower. You can see what happens here. The signal isn't always clean. We failed here, gave it another shot before we ran. We failed back here because we didn't hit oversold. And we briefly touched oversold here and are hooking back up again. So the times to understand when the breeze is shifting is what you want to look at. And this stochastic is one of the major uh, secondary indicators that we keep an eye on. So here's the S&P 500. If we go to a 5 minute, you can see the gap up, the morning rally, the afternoon fade, and then sideways into the close. Let's flip this to the NASDAQ 100, the strongest sector, strongest, but did hit oversold and now hooked back up, gap up, closed in the lower third of the range, but got back above the 21-day moving average as the S&P 500 did also. In fact, it never closed below the 50-day moving average. So that setup is there for higher prices from a stochastic standpoint. Let's go to RSP. This is the equal weighted S&P. This is floundering in oversold territory, but we did get a hookup. We also got a hookup 2 weeks ago, and it failed. And this is just the equal weight index not outperforming the market cap weighted index. But again, we have the crossover. The setup is there. You need a setup, you need a trigger. And in this case, the setup, we crossed. What do we want to do next? Let's get above the 8 and the 21-day moving average. Well, we ran into the declining 21 and faded, as I mentioned. We did gap, but we also faded in most of the indexes except for the positive closes, the strong positive closes on the S&P and the NASDAQ. Strong from a numbers perspective, but still off the highs. Next up, the Dow. Again, languishing in oversold territory. 2 weeks ago, we tried to hook up and out. It'd be nice if you could get a multi-week run up on this in the price, and that'll be reflected in what's going on with the stochastic. But we failed, but we did cross back up again. However, ran into the declining 21-day moving average and failed. So these lagging indexes, the first thing we need to do is get back above this declining 21-day moving average, move the slope of the line back up, come up through the 50-day moving average, and there's room to run if we can pull that off. So there's the Dow. Let's go to mid caps. Again, multi-weeks in oversold territory, gapped up, ran into the declining 21-day moving average and failed. Same thing we want to do here. We got the stochastic cross up, but we're not above the 21-day moving average. Russell 2000, also languishing in oversold territory. We got the hook up again, but failed into the declining 21-day moving average. So that's the thing that we want to keep an eye on. I don't have it as one of the keys. We want to We key mostly on the S&P and the Nasdaq 100, and those we want to see hold their 21-day moving average on any pullback. And leadership after 3 days up, we don't want to see large negative reversals. We want to see those go sideways a little bit, as you'll see when we go through some of those leading charts. So those are the major indexes. We're going to turn stochastics off now. We've all got that same setup. Now let's go to some of the inter-asset correlation, and we'll start with the VIX. The VIX was down a little less than a percent today. It's got a 16 handle, which is good. That implies 1% average true range, or 1% average true range going forward for the next 30 days for the S&P 500. The current ATR of the S&P 500 is like 1.19, so it's higher than we would like it to be, but that's because of a bunch of the bigger range sell-offs around New Year's. Now we want to see that 1.19 ATR on the S&P start to turn and start going lower, ideally break back below one. Um, that's when the market does its best work, and volatility is decreased when the ATR of the S&P 500. We use a 21 period. The standard is 14 for the ATR, but our data provider, Market Surge, uses the 21. So there's the VIX. What's next? The US dollar. We mentioned last week we had a breakout in the US dollar. Well, that pulled back a little bit on Friday, and then over the weekend, news came out that Trudeau, Canadian Prime Minister, was going to resign. Canada has had enough of him. The Canadian dollar rallied on him resigning, and he did, in fact, resign today. And this may lead to a failed breakout in the dollar, Canadian dollar strength. The US dollar pulled back today. It did bounce right at the 21-day moving average, which is what you would expect. But for right now, this is a failed breakout on the dollar. So that's another thing we want to keep our eye on. A weak dollar is better for US stocks. Ideally, we break below today's low in the dollar, which would also take us back below the 21-day moving average. So there's the dollar. Next up, precious metals. Gold, GLD, tight range continues to base. SLV, silver. Couple days up here, still trying to put in a bottom. GDX gold stocks look terrible under their 21-day moving average. Bitcoin crawled back above 100K. That came with a move back above the 21-day moving average. And the 8-day, and we added to this today. Good setup here, good risk reward. It should hold the 21-day moving average after pulling back. Came very close to the 10-week. Didn't touch the 50-day moving average, but came close to the 10-week. And some strength the last 3 days on Bitcoin. On bonds now. Not a lot of movement in bonds today. BND down a bit. TLT down 0.45%, making lower lows on the price. That means TYX, the 30-year. Yeah, you got a higher high there. TNX working on a breakout, hasn't really broken out yet, but this is in a consolidation near the top of the range. That's our inter-asset correlation. Let's go to the tail of the tape, and there are some important things here that I want to point out. The VIX, where the VIX I mentioned, I forgot to fill this in here, but the VIX is at 16.04, and it was down less than a percent today. So news: Canada Prime Minister Trudeau resigned. We talked about that. That's a factor, at least right now, in the failed breakout of the dollar. The CES conference, I mentioned that also. That's really the major news. So today's keys coming in. Where were we versus this 58.50 level? Now look down here, this 58.50 level. These numbers are on here, and they're on here because they're critical. 58.50 to 58.78. It's October resistance and November support. We touched it on 12.19 and bounced, 12.30 and bounced, 1.2 is bounced. That told us we can't go lower than this level. If you can't break a level, you're going to bounce and go higher. That's what we saw Friday. That's what we saw today. Above that 58.50, above the 50-day NASDAQ 100 key, we were looking at the 21 and the 50-day, and we're above both of those. Day count from up one to up two, back above the 80 EMA, back above the 21 EMA. The slope of the 21 is basically flat. We need to see and sustained strength in the S&P 500 to turn that up. Our expectations, I did not change this, but they're certainly more positive now with this being back above the S&P and the NASDAQ 100, as you can see, breaking back above there on these levels versus the 50-day and the 21-day. We talked about the action. How about individual sectors? Really, it was just tech that led. Semiconductors, XLC, and XLK. To the downside, a bunch of value sectors. ITA, that's aerospace and defense. ITB, that's builders, oils. And then XLBFI, PUR, and PU and RE. That's basic materials, financials, industrials, staples, utilities, and real estate. All the money flowed into growth leaders today. I think this CES conference has a lot to do with it. That Foxconn sales or earnings news was a bit of a surprise too. We need to hold those gains in the semiconductors. From a portfolio standpoint, we added to EQT, that's the oil name that we have. We added to Bitcoin, IBIT. We added to UPRO with the move back above the 21-day moving average on the S&P 500. And we bought Square. RVAB, this is our adjusted beta, rose to 1.63. Our balance at risk didn't really change because the additional risk by these four buys was offset by raising the stops on the other uh, participants in the portfolio. So no change there to balance at risk. So the bottom line on the day, gap up faded in the morning, but growth led value, as you could see by the big 8 semiconductors and leaders being very strong. So the Tuesday's keys, S&P against the 21-day, need to hold it. NASDAQ 100 against the 21-day, again, want to hold the breakout. What are leaders going to do after 3 days up? And let's also add in here small and mid and the RSP versus where have they been failing against their 21E. So let's add that as a key for tomorrow also. Now let's take a look at some stocks, the 21 over 21 for this week. And we'll start off with what we own and how they're acting. So you're going to see this 3-day up a lot. I mentioned last week, while the indexes were weak, our leaders were just not breaking the 21-day moving average for the most part. And a lot of them you're seeing 3 days up. On the third day up, it's typical to rest or at least slow down after that. So A-Lab up 2%, looking good. Reddit gapped up. You're also going to see some candles where it closed around midway through after the third day up. You just don't run away to the upside after 3 days up. But undercutting reclaimed the 21 last week, 2 days up, new high and a pullback from that level. Twilio, new high and reversed. Palantir, there was a negative analyst report out on this today, and it lagged all day, down 5%, but still holding the 21-day moving average. Dutch Brothers, third day up off the 21. Rubrik, third day up off the 21. Google, third day up off the 21. Stop me if you've heard this before. AVGO, not really making any progress, kind of going sideways along the 8-day moving average, but holding its earnings gap up. MRVL, third day up, and it reversed near the highs. EQT, right near the top of this tight flat base, 27 days, 5 weeks. Looking good. Oil's showing relative strength. They did fade late in the day today. NVIDIA following up to its strength, its move back above the 21 and 50-day moving average and that 140 level on Friday, hanging right around 150 right now. Jensen Huang, CEO, has a big speaking either tonight or tomorrow at that CES conference. GEV got an upgrade and gapped out of its base. Bitcoin, as I said, we added to that, and Square, we added that today. FinTech acting well, very low risk entry, big break of this. You saw a lot of downtrend line breaks last Friday as well. As long as they hold them, you go with them. If they violate it, you sell it. So everything we just covered is what we own. Deckers stays in the 2121 as well as CLS. CRDO with a gap up and some nice volume today. App, positive close, gap up. Again, undercut and reclaim the 21 and 2 days up after that, or 3 days up. Rocket Lab ran into that 30 level and reversed. IonQ, 3 strong days up off the 21 day. And Ralph Lauren, we added this one to the 2121 list. Nice breakout, relative strength, new high on flat base. Todd brought this one to my attention today. There are a couple of other apparel type names that are acting well. So that's a 2121 list for this week. And that's going to wrap it. As always, like to hear from the emails, Don at revereasset.com. The phone's 855 Real Wealth. That's 855 732 5932. If you're interested in becoming a client, man, are you keeping us busy? We're getting all kind of people reaching out. Now is the time after a nice run up. The bull market makes geniuses out of anybody that's invested in stocks. Uh, but the key is, can you uh, keep those gains? It's not how much you make in the market, it's how much you can keep. The time to bring your assets to Revere is when you have nice gains and you've got them with somebody that has no idea how to protect those gains because they're not a technician. That's why our flagship portfolio is named GROTECTION, because we grow assets during uptrends. When things start to pull back, we lighten up. Uh, Bear markets like 2022, we get the heck out of the way. Bear markets, they only happen once you break below this black line. That's the 200-day moving average on a daily chart. So what do we have right now? We had some weakness going into the end of the year. We undercut and reclaimed the 21-day and the 50-day moving average, and now we need to hold it. We also need to get some cooperation from mid caps, small caps, and the equal weight S&P, as we've just completely seen domination by growth names, particularly data center names, which faded a bit at the end of the year, have really been strong. Um, a lot of hype going into the CES conference has something to do with that. But will it be a sell the news? It will be for some names. Some will disappoint with what they present. But as always, we've got a plan either way. We don't blindly buy something and hold it. We've got to stop in mind as soon as we get into it. And our newest portfolio, TurboTection, same participation and protection rules as GROTECTION. This one's managed by Ted and Connor. A little bit more aggressive than GROTECTION, and they can take bigger position sizes and get into some uh, stocks that aren't as liquid that we can't handle because of the millions we're managing on the GROTECTION side. So a lot of people reaching out to add some funds to that portfolio also. And that will wrap it for Monday, January 6th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.